data, whether it's the ISSB, whether it's the ESRS, whether it's the UK TPT, whatever it is, whatever you're manufacturing, wherever you're shipping it, wherever you are in the world, we want that one vision to come together. So this is a fantastic moment, and thank you all so much for joining us. I'm going to hand over and introduce our moderator, Joe Noss, from the UK, who is chair of ISO's Sustainable Finance Committee, the top level committee in ISO that handles the sustainable finance subject, TC 322. And on that note, Joe, it's yours. Thank you.
Thank you very much, Scott, and let me add my thanks to you all for coming along and participating. We've got a fantastic group of people here today. We're going to kick off with representatives from the official sector of organisations. One quick bit of housekeeping. I'm really keen that everybody gets the opportunity to speak and that we have a lively discussion. So please, if you could keep your remarks relatively brief, 2 minutes or so, that would be absolutely great. Let's not spend time doing a round of introductions. If everyone could briefly just give their name, their organisation, etc. as they start speaking, that would be really great. We only have one microphone, I'm afraid, so we're going to have to pass it between us, ably assisted by Miriam, who's agreed to be mic runner. Let me start off with the official sector panel and with Lee Smith from IFRS. Lee, maybe you could give us a couple of minutes on the role of standards in enabling sustainable transition. Lee, please, the floor is yours.
G'day. Couple of minutes, so I better be quick. So late June of this year, the IFRS Foundation via the International Sustainability Standards Board issued its first two standards, S1 and S2. S2 particularly focused on climate-related disclosures. So those were issued. We then received endorsements from the global securities regulators, IOSCO, which means they're fit for purpose to be used in the global markets. So our focus really from that point onwards now is all about the adoption of these standards. And we saw yesterday with the announcements with ISO that we felt there was a really important collaboration there and a really important linkage between how the disclosures of S2 can come about and the gathering via the management systems used in the ISO standards, particularly 14,000, can really assist in that. And so we see that as the first step. But importantly for transition, we've got to get better information into the capital markets for investors to take better decisions. At the moment, many of us are aware that information is fragmented and therefore you don't get the efficiency of the market allocations because the data is flawed. Ideally, using our standards together with the information gathered via the ISO standards will allow better information for better decisions. And on that note, I will pass it back, but I must say I have to leave at 3:30, so if I get up and you're talking, please don't interpret anything by it.
Fantastic. Thank you, Lee, and a really great cooperation agreement that was signed yesterday. Can we stay with the international perspective, but I'm going to turn to David Carin from the United Nations FI. Please, David.
Great. Thanks so much. I'm going to sit because standing in the middle feels a little intimidating. You're looking at me from all directions. So I am the head of risk at the United Nations Environment Programme's Finance Initiative. We really look at convening the financial sector to accelerate their climate, nature, and broader environmental and social commitments. And as we say, it's about accelerating sustainable finance and making finance sustainable. I think that this is such an important moment right now, and the torch that the TCFD lit and then has now passed on to the ISSB has been a critical one for mainstreaming disclosure and really starting to move toward that complete information. What we have is a recognition that we need more information on different areas. That's where TNFD comes in on nature. That's where some of the great work from the Transition Plan Task Force, Ira is sitting next to me here, and I know that she and the TPT team have a number of events this week. What I would say is I come at this from the financial perspective, even though I've worked the last 5 years very closely as a senior advisor to UNIFI. But my perspective is very much information is always adversarial and it needs to be decision useful. And when I say adversarial, I want to bring up a point that I don't think gets appreciated enough, which is that institutions, whether those are financial institutions or companies, are looking to have themselves presented in the best possible light that they can in order to maximize their value, to lower their cost of capital, to continue to grow their market share. All of that is perfectly normal and just. The challenge, and this is where we begin to run into issues and where the G word, greenwashing, comes into play, is when we don't have the rules of the road, when it becomes, I'm green, so am I, and it's that kind of Spartacus moment, right? You know, I'm Spartacus, but instead I'm net zero. And I think the key here is to recognize that tension between the analyst who is looking to say, is this claim, is this commitment, is this plan all that it's cracked up to be, and the institution. And obviously we know where things fall outside those bounds, whether those are illegal or otherwise. And so finally, just to say, I think that there's a real need to recognize that by setting those rules of the game, we're allowing that process to move from what is exclusively in the financial realm to now covering sustainability as well.
Thank you very much, David. I'm going to turn now to Maya from the EBRD, European Bank of Reconstruction and Development. And Maya, my question to you, which is hopefully not entirely unexpected, is what this means and what's the role of standards for sustainable development in emerging market and developing economies. Could you tell us a bit about that?
Yeah, sure. Thank you very much. I'm Maya Hennerkes from the EBRD, Director for Green Financial Systems. Look, as EBRD, we very much welcome global initiatives like the ISSB. We're really happy that we're all living some sort of moment where the flurry of standards, whether voluntary or non-voluntary, of the past years are kind of seem to merge together, and I think this will be super important. But we also need to recognize that not everybody is starting at the same starting point. And when you work in emerging markets, developing markets, I think it's very important that we also pick up companies, SMEs perhaps, micro companies perhaps, and financial institutions that work in really difficult markets sometimes, and that the legislative environment is not the same everywhere. So I think for us it's really important to continue to look at sort of the usability of standards. I think it's important that we keep reality checking that what we're requesting is actually doable. We obviously have a data challenge in many of the more difficult markets that we need to tackle in parallel, because they obviously go hand in hand. And but I do think we're on the right way. I have a hope that with the green standards we're going a little bit in the same direction that the financial standards have done maybe a couple of decades back already, where we can really find something that is a common language that we can all work towards, that works across markets, because that also helps us as international investors to go in one market in another, bring others with us, and we are all basing it on the same. But again, I think it's super important to highlight, which is also why I'm a big fan of looking at transition planning and how that can be reflected, because again, the starting points vary and the transition journey does look very different for each.
Thank you, Maya, and I hope we'll pick up on that point on transition planning later in this roundtable. Satoshi Okeda, I'd like to turn to you now in your capacity as a leading member of the Network for Greening the Financial System. David made the point about risk earlier. Could you maybe tell us a bit about the role of standards and the work of the NGFS in mitigating or ensuring the resilience of financial markets and institutions?
Thank you, Joe, for that question. Certainly, Network for Greening the Financial System, which is the kind of coalition of the willing to address the climate-related risks and the environmental-related risks from the financial perspective. And that coalition has been joined by central banks and the financial supervisors so far. And what NGFS has done so far is to set out a certain guidelines for the climate risk management by financial institutions and also financial supervisors alike. And also we developed a certain climate scenario to assess the forward-looking risks associated with financial institutions in terms of transition risks and physical risks. So we set out a certain scenarios which look at kind of 4-degree Celsius scenario, and also with certain 1.5-degree scenarios, but with a certain disorderly transition where transition starts very slowly, and so as a result that to catch up with the gap to reach net zero by 2050, people need to move fast at the final round of the kind of journey to net zero. So with those efforts, I think we certainly set a certain framework to assess financial risks from the climate and the environmental perspective. And although NGF itself is not necessarily a standard setter, because we are kind of a coalition of the willing, that there is a kind of a standard setting. There are a group of standard setting bodies in the financial community, like Basel Committee on Bank Supervision, or IOSCO, the International Organization of Securities Commissions. But we certainly hand the right button to them, particularly if you look back the time of the Trump administration. Those standard setting bodies were kind of stuck in terms of addressing those issues, looking at the climate or environment issue from the financial risk perspective. So it's a kind of the lesson learned through our exercise, that how we can manage a kind of standardization in the kind of polarized and fractured world. Thank you.
Thanks very much, Satoshi. And yes, anyone who's been looking at US polling will, I'm sure, be somewhat nervous of the possibility of that Trump administration maybe making a comeback in future. Can I turn now to Ira from the TPT? Ira, could you maybe pick up on the point on transition planning? Because I know that's something where the UK has been doing a lot of work.
Sure, happy to. I can maybe just in terms of, I'll do two things. First of all, what do we see for transition plans in the role of the climate sector, private sector climate journey? There we go. And then on who the TPT is, just briefly. So I think over the last couple of years, we've really seen companies increasingly get to grips with climate risks and opportunities. Many of them have started to define net zero targets or other climate pledges, but where we need to go next is really looking at the delivery of the strategy that underpins those targets. And this is where transition plans have a really important role to play. I think we're seeing a strong voice in the private sector, particularly from the financial sector, that they want to see this and that this is material information, which is why it's great to see this being picked up within the ISSB S2 standard as well. But it's definitely an area where a lot more consistency is needed. At the moment, you see that companies are providing various different levels of detail about their transition plans. Oftentimes, the information is not consistent, it's not comparable, making it very difficult from the outside to understand, okay, which are the firms that are actually putting the money where their mouth is and are starting to take steps towards achieving their net zero targets, and which are the ones that are putting the target out there but don't have a credible plan for delivery. So within the TPT, we've been working on this within the UK context over the last year and a half, working with a broad coalition of stakeholders from some of the standard setting bodies, from the private sectors, both from the financial side, from the real economy, with academia, to develop a good practice framework that sets out what are the consistent disclosures that we need to see from companies to ensure that investors and others have the relevant information about company level transition plans that they need in order to understand, is the company actually moving? And we just finalized that framework a few months ago. We launched it in October, and we're currently working on some sectoral guidance that sits on top of that. So there is an open consultation at the moment, and I would urge people to respond. We're looking at 7 sectors, 3 from the financial sector, and then 4 from real economy.
Great, thank you very much. Sticking with the United Kingdom for a moment, Alicia, can I turn to you as you're from the UK Financial Conduct Authority?
Sure. Yeah, so this has been a big topic for us, obviously. I should point out, so we're a bit different. We're not the central bank. We're actually the consumer-facing regulator. So we have a very wide remit. We care about how consumers are treated, market integrity, competition, and we work very closely with our colleagues at the bank. Myself and many others used to be at the bank. But from the transition planning perspective, one of the things is that we do not mandate a transition plan, but many companies have made, sort of very public sort of announcements that they plan on going to net zero. So the perspective that we care about is if they're making those announcements, if they're making those pledges, how are they going to get there? So if you say you're going to do it, the big thing on our agenda is actionable and specific actions that they will take. So it's taking it from very high level general, we will be net zero and getting kudos for that, to being able to explain to us what they have done in concrete terms to actually get to that place. And that is actually one of the other big topics that we care about, because we're very involved. We're part of IOSCO. We have a very wide-ranging agenda. But the next year and next few years will be about taking a lot of this work from a compliance-based perspective, where people are ticking boxes, to actually making it part of the DNA of how they operate. And for us, transition planning will be a big part of that, including ISSB and where the UK consultation ends on it. I think you asked me also briefly to mention, we put out last week SDR, it's our labeling regime. So we have put out a few key elements, one of which is an anti-greenwashing rule for all financial services within the UK. It reiterates what I think already existed, but makes it absolutely clear that greenwashing sits within that. It will still be held to a standard that we would normally expect of financial services, so we will use our full range of tools to deal with it. But one of the other aspects is it adds labels around products that asset managers market to consumers. So making sure that consumers can actually understand what they are getting, and we've placed restrictions on how they can also name and market their funds. So you are no longer in the space where you can just call it anything and call it green and not be able to back that up. It's a very practical regime. It has been, as far as regulation goes, relatively well accepted by the industry. But a large part of it is just evidence what you're saying. If you are calling it sustainable, say why you think that, be able to prove it to people. Thank you.
Great, thank you, Alicia. And I'd love to understand a bit more, maybe in the subsequent discussion, about maybe the role that international standards, including from ISO, can play in implementing some of that. I was hoping we'd now hear from IOSCO, but I don't think our... we do. Hi. Could you maybe tell us a little bit about IOSCO's recent work in this space? Is it Martin? Sorry.
Thank you very much. Yes, Martin Maloney. I'm the Secretary General of IOSCO. One of the challenges of this conference is the timing of panels. That they don't all run to time. Had the United Nations mediated an agreement between panels that they would all either run on time and finish on time, or finish by a defined amount late, then that would reduce the frictional cost on elderly people like myself running around in this lovely weather in Dubai from one panel to the next. But such a degree of interoperability has not perhaps been achieved, unfortunately, which increased the costs for those who have to try to operate in this fragmented marketplace. IOSCO, we would say, from a strategic level, has pivoted very significantly into this space since about 2020, 2021. Recognizing that there was a very significant problem that had arisen in the marketplace with what's now often called an alphabet soup of standards that was not working for investors, and that's what we care about, let's be frank. And we needed to take initiatives in this space to try to change and increase the role of the public sector and public sector standard setters in this whole complex scenario. We think where we've got to already, and I hope we're not overly self-satisfied, when maybe you might think of ourselves as about a quarter way through the journey, indicates that pivot was correct. And not only correct, it was essential to the relatively optimistic prospects that we have for the period ahead. They're optimistic, but with a tinge that for many people they're not fast enough. But they're about as fast as the international regulatory community has ever gone. And in fact, I think we're running close to a 4-minute mile, having previously only ever walked a 14-minute mile. This is quite new and effective for us as regulators. And I just give you I'm not going to boast about what the ISSB has done, because I see Lee over there and they've done an incredible job. But I just look at the way the IAASB is now working through the consultations for its auditing and assurance standards at a faster pace than it has ever done before, because we asked them to do that, and they did it. And they are not alone. It's happening throughout the system. And not only that, the message in relation to adoption and the capacity building programs that we're all adopting to try to push out adoption at a faster rate than the world has ever seen before is an unprecedented success. Of course, I shouldn't get too boastful and too optimistic, because it could all fall over. It's extremely difficult and complicated process, and there are many difficult steps to go. But given this is an ISO pavilion, I should say one thing about the relationship between those public sector standards and the other standards that are out there. Some standard setters from that earlier period, and you might include the TCFD as a characteristic example, have stepped back and stepped away and say, our job is done, we started all this, we did our job, and with great credit, I think, to them, they step down and they say, let somebody else take up the baton and run with the next pace, and they know who that is, so they hand over the baton to the others to do it. Others say, well, we're doing something slightly different, so we're staying open for business, we're still running and developing our standards, and there's nothing wrong with that. But when you deal with an organization like the ISO that has a long history of standard setting, in all my years working with IOSCO, I've never for a moment thought that we were in competition with the ISO, not for a second. We're not. We do different things, and we shouldn't create false conflicts, and we shouldn't, in fact, allow ourselves to be divided by a common language or a common vocabulary. So we use the word standards. That doesn't mean we do the same things for the same purpose. We do very different things. Global public standard setters do something very different from what organizations like the ISO do, or for that matter, for organizations like the GRI do, or many other organizations around the world that we continue to interact with. There is actually there is a limit on the space there is for standard setters. You can go back to creating confusion, but there's a significant amount of space for people to define what the outcome is at a global level, to do that at a jurisdictional level, to do that at a sectoral level, to do that in all sorts of different ways. But then there's also another space around how to do it. And that's a very different space from what it is you're trying to achieve. So I see nothing but complementarity between many of the organizations that are still active in this space. If we run into conflict, we'll call it out. But at the moment, it's looking pretty healthy from where I sit.
Fantastic. Thank you, Martin. I'm going to turn to Alessandra now from the European Commission to get a European perspective on things.
Thank you very much, and good afternoon, everyone. I have to say that I feel like the odd one out, at least until now. Not only am I from a government institution, let's say, but I'm also from the department in charge of climate action and not of finance or standard settings. So bear with me if what I say, you know, on top of it, I'm new in my job. I joined 6 months ago. I'm discovering so many organizations that I'm sure I will have to work with in the coming months as we cover finance, sustainable finance in our unit from a DG Clima perspective, of course. So a couple of things that I wanted to mention. I mean, we, of course, don't need to convince each other that working on sustainable finance and setting standards for shifting public private institutional flows or financial flows into climate action is necessary. I think you know that better than I do for sure. What I do want to do in 2 minutes or so is give you a couple of pillars of the framework that we have been setting in place in Europe to try and help us shift finance from the private sector away from brown activities and towards green activities. And I think that's the key objective that we have in mind, is really looking at how we can align finance flows to the goals of the Paris Agreement. That's, of course, a sustainable finance strategy that we have in place. I was at an event yesterday where someone linked it or said it's something like they expected to have the same impact that the General Data Protection Regulation had. So it started in Europe, but companies around the world are now aligning to the GDPR to make sure that they can operate in Europe. So that's hopefully the way that we would like to see. I hope it's not perceived as bolstering what we have, but we have seen it before, that Europe can really set the standards and influence the way that other countries are actually doing the same. So the framework is built on 3 key pillars. First and foremost, of course, the taxonomy, that is trying to define what is actually a sustainable activity, and we have different sectors that we cover for climate action specifically, whether it is mitigation or adaptation, but also, of course, environment and biodiversity in a different set of taxonomy delegated acts. What is interesting from my perspective is that everything is underpinned, but also the do no significant harm principle, and that means that we try to make sure that we take a holistic approach to financial investments across the world. The taxonomy is voluntary, but is actually becoming mandatory for companies that decide to use the taxonomy. And I think that's also quite interesting. From my perspective, it was born as an instrument for the private sector. We've seen it take a life of its own. It's also used by public institutions right now, and that poses some challenges around usability that we will have to come back to in the coming years to make sure we can address. And of course, we are already sharing our experience with third countries, including through the International Platform for Sustainable Finance. The second pillar is around disclosure, and I think many of you have talked about the importance of data and transparency, and of course the sustainability reporting standards will start to be rolled out in the EU in 2024. Here again, what I think is quite unique to the framework in Europe is that we use what they call the double materiality assessment, meaning that we not only look at the impacts of climate or environment on the company itself, and the physical risks, of course, but also to the active contribution that companies can make to solving the climate challenge, or of course making it worse, which we would want to decrease. And I think we've been working jointly with the ISSB, the International Sustainability Standards Board, to make sure that the reporting requirements are interoperable to the extent possible. But of course, we need to make sure we maintain the ambition that Europe really wants to see. And then, of course, the third piece that I wanted to mention is around instruments and tools, and in particular the European Green Bond standards that were just published last week or a couple of weeks back, and they are built on international good practices, and hopefully we will be able to use them also to demonstrate how the taxonomy can in practice help raise capital for the transition and climate action. I mean, now the package is more or less complete. We'll have to see how companies, including SMEs, are able to comply with it, and looking at issues like usability will certainly be important, coverage, of course, of the different sectors, and we will see in the coming years how that will pan out. So I'll stop there, and thank you very much.
Thank you very much, Alessandra. I'm sure I know people, because I will, have questions for you on the EU taxonomy that maybe we can come to in discussion in just a moment. Before that, let's stick with the European perspective. European Investment Bank, Elena, sorry, over there, I couldn't see you for a moment, please.
Thank you. So Elena Rone, representing European Investment Bank. Before I dive deeper into our take on standards and transparency, maybe just to say that the European Investment Bank is the Bank of the European Union, has made commitment to transition to the EU Climate Bank with 3 operational goals set. So 50% of our financing at minimum to green investment by 2025, and actually we have met that target ahead of time. Last year, 58% of our funding went to green projects. We want to mobilize 1 trillion of green investment in Europe and globally by 2030, so over the critical decade. And then all our operations and activities are now aligned at the project and at the counterparty level with the low carbon pathways and the key goals of the Paris Agreement. So having said that, now to the standards and sort of the policy frame that we have set ourselves for the green transition, we draw a so-called climate bank roadmap to guide our transition, to be the playbook for our green transformation, the standards and policy frames that we have set ourselves are very much guiding our activities. And here we are as a EU bank. Okay, sorry. We are taking guidance on the EU taxonomy. So our green definitions and how we report and track green are aligned, or we are on the way of aligning them with the taxonomy. At the same time, we have also defined ourselves the so-called Paris alignment framework. So everything we finance have to comply with our Paris alignment criteria, in particular the high emitters as well as the banks. And there really we are again taking guidance on the do no significant harm principle that was mentioned before. So this is what we are currently doing. And looking forward, apart from converging with the taxonomy and implementing our Paris alignment framework, including support to our clients to set up motivated Paris alignment decarbonization plans. We are coming to terms with our clients with the CSRD and also with the SFRD regulation internally, as well as in our conversations with our clients. The green bond standard was mentioned, so we are endeavoring to issue a green bond standard compliant bond soon as we grow our green asset ratio over time. And then maybe just a few words on the challenges that we are facing. Usability and data has already been mentioned, and that is of course an issue that we also have to consider internally when we further develop our tracking and reporting framework. But also externally, how do we engage with our clients on the taxonomy alignment as well as the Paris alignment? But clearly for us, the Paris alignment framework and the taxonomy framework does help us to direct our business on green investment, but also then indeed have these conversations on decarbonization, in particular with our clients.
Thanks very much. A question for both of you Europeans that arose during our prep calls is, how do these standards and taxonomies cope with industries that are very highly polluting, mining for example, but absolutely critical to transition because we need the copper and the lithium that they're mining to reconfigure our electricity grids and electric car batteries? Maybe that's a point we can come to in the discussion. Before we do that, Carsten, can I turn to you? Maybe you'd like to pick up on that point about alignments that Alina mentioned.
Yeah, thank you. I represent the European Financial Federation of Analysts and also EFRAG, which is European Financial Reporting Advisory Group, as well as the German Environment Agency. Alignment between standards is pretty important. I would put it this way as an analyst. If you've got a standard, you can compare entities. When you can compare entities, you can measure them. You can measure the performance. And if you can measure the performance, you can do benchmarks, and these entities want to become better. And then they want to be best in class in order to be electable by the potential investors. And therefore, we welcome, of course, the efforts of defining clear rules, even though they might be criticized on the EU taxonomy. But it gives the investors clear guidance: what is green, what is non-green. Actually, based on this, German Dean is going to come out with a standard classifying financial products from A, very green, to E, very dirty. So I think it's just this simple game. Set rules, and ISO standards can help here to operationalize standards such as the S1 and S2 on the IFRS side. But the EFRAG framework, which is based on the CSRD, the European Sustainability Reporting Standards, are more far-reaching. We cover environment, social, and governance issues. And there are a lot of ISO standards which already comply or give help for this. And so I'm happy to announce today for EFRAG that an agreement in principle has been reached with Senelec, so the European entity of partner organization of ISO, that these standards will be used in order to give guidance for the application. It has to go through the supervisory board and the governance panels, but in principle there's also willingness to work together.
That's fantastic news, and thank you for sharing that announcement with us, Carsten. I'm going to turn now to Dieppe from the World Bank IFC. Dieppe, you get to have the last word as part of our public or official sector panel, and then we'll move on to some representatives from the private sector.
Well, what a big honor. Pleasure to be here with everyone today. Thank you very much. So at the World Bank IFC, and especially on the IFC side, where we're trying to finance private investments, with limited, and with many of our private counterparts with rather limited capacity, we always try to look for frameworks and platforms or methodologies that are replicable. So one very good example of a platform that we have that is replicable and that has been very successful is the EDGE Green Building certification. Many of you might know it. It is being implemented in 200 countries around the world, with projects completed in over 100 countries. We started in 2015, and to date we've already certified 65 million square meters of assets and worth $65 billion dollars of assets, including almost $13 billion now of own IFC investments. And we created the EDGE Green Building certification, even though there are other certification schemes on the market, because we actually identified a gap in emerging markets. The existing certification schemes at the time were very complex and very expensive to implement, especially for emerging markets. And with that in mind, we looked for a simpler way to do it, a cheaper way to do it, but also that allows us to track data and keep data and make it public transparently. And so the EDGE Green Building certification, again, keeping simplicity in mind, measures energy efficiency, water efficiency, and then the carbon emissions captured in the building materials. And so with just those three indicators, KPIs, we developed a system that's been hugely successful, that's been adopted in 200, like I said, 200 countries around the world. In some of the top markets that we've done, South Africa was the first country where we implemented, and now just a few years later, South Africa now accounts for EDGE Green Building certification accounts for almost 20% of new green building certification. Colombia only started 5 years ago, and now EDGE Green Building certification accounts for 1/3 of new certifications. And so you can see how a simple system that captures data and that's easy to use and affordable really can catch on. Now, there has to be a reason and incentive for people to use the scheme as well, and that is the IFC also co-developed the green financing framework with ICMA, with the International Capital Markets Association, and it's accepted by the International Association of Banks. And so now all of the banks will accept EDGE green building certification for their green financing instruments, sustainability-linked financing, green bonds, and green loans. And the IFC is actually the biggest issuer in the world of green bonds and green loans. The third aspect of standard setting is that it has to have an automated or electronic system that captures the data and also makes it available to the public for free. So we basically provide it as a public good. Now, we couldn't possibly do that without partnerships, without governments like the Swiss government and the UK government to fund our work. And of course, standards are not very meaningful if they don't harmonize across countries. And so luckily for us, we've managed to do that. It does take a long time, but we've managed to be accepted in all the markets. And now the last thing that we're doing is trying to harmonize that with the EU taxonomy. It's not too difficult. It's pretty much harmonized, but there are some procedures that we need to go through. But again, so just to summarize it, again, simplicity is one, availability of data, an electronic system to capture, and then there has to be an incentive, a financial incentive for the market to use. And finally, partnerships. I mentioned partners who donate for us to do our work, but it's also very important to have local partners. The banks who finance finance the developers, the universities who are actually teaching the EDGE methodology to everyone in the market, and actually that's also been a way to create jobs, because the students who are learning the curriculum in universities then get jobs with the developers who have accepted the EDGE methodology.
Thanks, Diep. I mean, I guess one question, as you went last, I have the luxury of asking a question. One question that might be on the lips of some of our ISO colleagues is, how does that private sector certification scheme that you mentioned in the first thing you said, how does that feed into integrate with all of the sort of public sector work that's going on more broadly, including through organisations like ISO? I don't know whether you want to answer that now, or if not, we can very briefly, because we're short on time.
I can, because I have to go. It's not just private, actually. It's accepted by governments around the world. And in fact, the government, one of the first ways we start in a country, start a new EDGE program in the country, is we work with the government, at municipal and national level, to help them develop the building code, to ensure that the building code aligns well with our recommendations in the EDGE methodology.
Okay. Thanks very much, Diep. I'm going to turn now to our private sector and participants from academia. Nick, I'll ask you to kick us off, if I may. Give us the private sector, Oliver Wyman view on the role of standards in sustainable finance.
Thank you very much, Joe. My name's Nick Studer. I'm the CEO of Oliver Wyman. We're a consulting firm with a strong presence in financial services, and I'm going to draw on our experience of working with financial institutions with over $40 trillion of balance sheet on sustainable finance topics. We've also supported the TCFD when it was getting going. We're supporting the TNFD. We were the official supporter for GFANZ for several years. We've worked with the SBTI, with the CDP, quite a lot of other bodies that have been establishing frameworks and standards. As a manufacturing engineer who's spent most of his career consulting to banks, Scott's opening comments about this coming together of two worlds resonates enormously with me. And I'll start by saying that I think that is extremely welcome. A number of the public sector institutions have talked about the risks of greenwashing, but I also see the attendant risk of green hushing. And what Standards does is essentially help share best practices. If we're not all learning from each other's mistakes, we're going to move far, far too slowly. The other thing which I've been extremely encouraged by in this session is that many of what I see as the private sector's concerns are already well understood by the comments we've heard already. Martin talked about the alphabet soup. It really can be overwhelming. It's often the same teams in our client organizations who are handling all these different regulatory and standards initiatives, sometimes overlapping, sometimes not, trying to keep up with all these different elements. And the financial industry is largely used to reacting to regulation. We have some regulators in the room. The Financial Standards Board will do something, national regulators will pick it up. So the plethora of approaches, I think, has been quite hard to keep up with for many. And while I absolutely welcome this advent of standards, this growth of standards, I see really three sets of criteria that it would be very helpful if we could continue to meet. And again, these will resonate from what we've heard from the public sector. The first one is to reduce complexity by harmonization. In that regard, the IFRS, ISSB efforts are incredibly valuable. The alignment of the disclosure frameworks between CFT, TNFD, ISSB, even the SEC is also likewise very helpful. The second question, I think, is to engage financial institutions through the process. Where is harmonization and consolidation most helpful? What are their pain points? How can we actually help move the whole system faster through standards and standardization? And the third one is just to continue to provide succinct practical guidance on implementation, on interoperability with other frameworks, with concrete examples of what good looks like.
Thanks very much, Nick. Can we stick with that theme of reducing complexity and the need for coherence? I'd like to pass to Lauren, please, from JP Morgan.
Thank you very much. Lauren Anderson from JP Morgan. I wanted to talk a little bit from an issuer perspective and make some distinctions when we talk about standards. And that's really threefold. One, there are product standards. Two, there's market-based standards. And then there's prudential standards. And they're all quite different. And I would say the industry has a great practice with product-based standards. I mean, we just heard some of them in terms of the EDGE program, but I mean, you know, there's a long history here. There's ISDA master agreements, GIMRAs, there's been tons of work with ICMA, and some of that is coming into the regulatory space. We have the EU Green Bond standard, but that I think is really important to get finance flowing because it deepens the markets, it provides additional liquidity, it allows you to securitize assets, all of which is hugely important. So product standardization, kind of all good from the industry perspective. When we get to market-based standards, I think we are definitely making progress with the ISSB baseline, which some of you heard this morning. I don't like to call a baseline. I like it as a standard. But we are seeing different jurisdictions gold plating on top of that. And I wouldn't call gold plating the same as interoperability. And I think this is a risk that we have different jurisdictions doing slightly different things when it comes to market-based disclosure. And the challenge there that we're going to face is not just the inefficiency of that, but actually some of the legal risk that brings for issuers. And there's a difference between market discipline in terms of actions being brought against companies for greenwashing or whatever it is versus unmanageable legal risk. And we are seeing that in some places. And then when we move to the prudential regulation, strangely, this is where we see the most fragmentation at the moment. And I say strangely because there's a long history of prudential regulators working through whether it's the BCBS or the FSB to develop international standards for consolidated global groups. And right now that is happening very piecemeal, very bottom up. When we talk about transition plans, we have jurisdictions wanting transition plans for their particular jurisdiction and the businesses in their jurisdiction with no regard to what the actual global transition plan is. And I think this is something that unfortunately could serve to hinder the transition process if we have too much fragmentation in the prudential space. And I would give another very pragmatic example of that. When we look at things like the capital regime and how that applies to banks, and particularly for countries that are very bank-based financed, it's very hard to do things like equity financing. And that needs to be recognized. And I think we do see in some places, the U.S. very recently finalized their Community Reinvestment Act rule. And that provides an interesting piece where you can now get community reinvestment credit for doing climate-related transition financing activities in low and moderate income spaces. And that's something that will unlock financing. But again, we don't see that universally. So these are some of the challenges, I think, to actually getting financing moving.
Thank you very much, Lauren. Can I pick up on that point about market discipline and greenwashing, which is something we heard a lot from the official sector earlier? Victoria, can you speak to that a bit, please?
Thank you, Victoria Brand, Deutsche Bank, Head of Group Sustainability. Greenwashing, an interesting topic. So I think a lot of good points have been already made around role of standards. When we started developing our sustainable finance target and framework, I think a lot of energy went into it. I think it took us quite a while to really develop what it is. So from this perspective, having this safe harbor of internationally acceptable principle standards is very, very important. And from my perspective, we, for example, developed transitional finance framework, but it's in the drawer. We haven't launched it yet, just for the reason that you just mentioned that, from market or regulatory perspective, even on a transition finance, there are so many different tendencies how it should look like. There is no harmonization at all. We see different developments and definitely engage also with European Union and colleagues in the European Union to have more harmonization and clarity, because to really move towards sustainable finance and transitional finance, we need a safe harbor, safe frame. I think another point to make for me is that we are intermediary. We are very much dependent on what kind of information we can get from our clients, and therefore, when it is about kind of standards and regulations, these are not only standards and regulations for financial industry, but they should be a kind of a parallel run also to related to real economy, because otherwise we won't be able to really credibly create products, create solutions which are consistent, harmonized. And as we today just looking at our ISA today, where we are today, also another challenge we feel is the rigidity of the existing regulations or certain frameworks. Like we've talked a little bit around the EU taxonomy. Personally, I think as the idea of having a frame is very welcomed, and I continue also in very much support the idea, but the implementation is very, very challenging. For example, we cannot use the proxies, and we have a very onerous obligation on us to engage with our clients to look at do no significant harm criteria. And for example, one of the options, and this is what we would suggest in terms of reducing complexity, would be using some of the very well acknowledged and used ISO standards around environmental management or health and safety management as a proxy for such as do no significant harm assessment. Would be one kind of existing standard commonly used globally. Why don't we use it as a proxy? So there are definitely ways how to simplify and use existing standards. So just to say, standards are important, also will create a more safe harbor for financial industry, for banks to move forward with transition, but should be flexible, complexity should be reduced, and we should really use and refer to existing common market practices and standards.
Thanks, Victoria. Frank, can I turn to you at this point as the representative of another European bank? Can I bring you in, particularly on this point about the EU taxonomy and maybe what role the private sector can play in helping firms navigate it?
Yeah, thank you very much. Good afternoon into the round. Unexpectedly busy, no audience, but we have them virtually. That's great. Hello. Yeah, I can't be more than agree what had been said already from my two colleagues from the private sector banks. I'm from DZ Bank, the cooperative sector. We mainly there for helping the SMEs and for setting standards. I think in general, yes, frames are important, but they shouldn't be too tight. Sometimes you have to focus also for a frame, a smaller frame, on special sectors because they are not all the same, so you have to be very specific. But loose enough to create flexibility. And then what I think it's very important, and some of you might be disagree and want to go in a verbal discussion with me now, I would call what we would need, in particular for SMEs and municipalities, we need to set a standard for voluntary carbon offset trading. But the public side often, as well as the science and the politicians, ask for contribution, 100% contribution from the private sector. And this is, to my personal opinion, the solution. If we agree on something, at the moment we have 47 different carbon trading systems among the globe. You can imagine what impact that is, nearly nothing. And if at best regional. That's not good enough. Let's cut the world in 3 major time zones. Asia Pacific, Europe, Middle East, Africa, and Americas, North, Middle, and South. At least here, we should set a point. And in Europe, we can start. Europe together with Middle East, under the presidency now of the UAE, they have 12 months. And it's not so difficult to set it up because most of those exist already. But let's agree on something. I mean, JP is already one of the largest banks in Europe. 500 billion balance sheet just in Germany. Guess what? It's an American bank, yeah, but it's global. And they, I'm pretty sure, would appreciate Deutsche anyhow then, yes? You're very strong, you make your money in Asia. I worked there, I know. And we would appreciate that here as well. And this is something where we can start. Have it not to lose, because for whom do you need it as well? For the investor side, who has to go into these credits and being accepted. So that means, in particular, pension industry or lifers, they want to see that. They're going to request that. And regulatory and standard setting not necessarily has to be a bad one. It could be also a good one and guide. I'm happy to discuss that further. I think we have not enough time here if everybody wants to speak, but I think that's an approach coming from the practical side and building a bridge between public and private sector we can walk through. Thank you.
Thanks very much, Frank. Well received. Elliot, can I bring you in here from the Principles of Responsible Investment, particularly on this point around the role of standards in establishing coherency in different markets?
Thank you very much. So my name is Eliette Riera. I represent the Principle for Responsible Investment. For those of you, and I hope there's not many who don't know who we are, we're a not-for-profit organization, so a little bit at the junction between the public and private sector here. We represent over 5,000 signatories around the world, and those are financial institutions, big and small, in over 100 countries that are committed to responsible investment practices. And in the policy side of the business, what we really do is looking at the regulatory enablers and barriers for this transition. We've heard quite a lot already around the importance of transparency, which for us is the basis and the first necessary but not sufficient step for transitioning the market to net zero. The second step that we really need, and it's really relevant in a setting like COP, which is national strategy. So it's about the national policy environment, and it's not just about the climate policies that you're putting in place. And it's a lot of what Ira was talking about in terms of transition planning, but from a whole of government perspective. So it's about making sure that climate and sustainability are the core of every regulation that governments are looking at. And the last step, another also really relevant, both for this setting but also this conversation, is global systems. We cannot fight this alone. We cannot fight this individually. And we also need to make sure, as we've heard already, that there's coherence, consistency, interoperability of everything. We've done a lot of work on policy in terms of the role of MDBs, of the role of the multilateral financial system, looking at how we can accelerate that transition to net zero. The Paris Agreement was adopted 8 years ago, and we're still not there on the third goal, which is making financial flows consistent with low greenhouse gas, climate resilient development. On this thing, we've heard a lot of the great work, and I really agree with you in terms of it's not a competition. Everyone has their role to play, but there's also a real need to collaborate and discuss all of this. And the PRI, we're quite versed in bringing people together with our 5,000 signatories from over the world. And for those of you who may not have noticed, yesterday we were very happy to announce that we're going to be hosting a task force related to the high-level expert group recommendation on net zero last year. So the last recommendation 10 of the H-Leg report last year, was about the need for policies and regulation that enable and align with the net zero regulation. And the PRI will be hosting a task force that is linked to that recommendation, which will focus on 3 different aspects. The first one will be creating a collaborative space. So as you said, there's a lot of work that needs to be done. There's a lot of expertise. And I can't remember, but a lot of you have mentioned the need to collaborate, to talk about how do you do this? How do we share best practices? What works in your market? What doesn't? And how can we adapt all those different things? The second aspect will be research and technical support, so the analysis of what is underpinning all this transition, what are the policies. And the last will be looking at opportunities within the regulatory market. So a lot of the regulators that we have here, and Alicia left from the Financial Conduct Authority, but this collaboration is already happening in different pockets, but we really hope to bring everyone together through this task force. My colleague earlier talked about the need for harmonization. There is a need for harmonization. There's also a need for finding the right solution for the right countries and the right environment, and making sure that this is going to be looking at from a bottom-up approach as well. So it's not about, especially in this context, the Europeans or Americans or Brits imposing a network on others, but it's about sharing, this is what works, this is how we can do this. Very happy to answer any questions. I'll leave it at that for now.
Just conscious of the time. Helene, can I bring you in now? Because one of the points we discussed when we spoke last week was all these initiatives are great, but there are limits to what standard creators, in the myriad of forms that Lauren described them, can achieve in and of themselves without the right government climate policies. Can I bring you in on that?
Thank you very much. My name is Hélène Lanier. I'm CEO of 2 Degrees Investing Initiative. So we are a bit also in the middle of all the ecosystem. We are a think tank working actually to produce applied research work for financial market practitioners and aiming at aligning financial flows with the Paris Agreement. Basically, what we have tried to do lately, and also as a member of the Sustainable Finance Platform at European level, we have been trying to come back to what investors expect. And we have been conducting several studies all over Europe, trying to understand what investors really want. And what we believe is that when you try to engage in a discussion with retail investors, what they want is basically what we would call impact. So when they hear green, whatever ESG, all the jargon we use currently, and we are used to differentiate in our world, they do not. So they expect impact, and guess what? There is no legal definition of impact. So for us, this is a major issue, and we really are concerned that greenwashing is not really greenwashing. There might be an impact washing problem. So our really hope is that at international level and also at European level, we are able to define, either through regulations, through voluntary standards, or any other tool, we are aiming to define what impact is and what it is not. And for us, it is very key. We have issued a first attempt of methodology to assess the impact potential, because it is very difficult to measure impact, and we recognize it. But at least we can measure the intention and the intensity of actions that financial institutions have aiming at impact, for instance, through engagement.
Thank you, Helene. Really interesting point there on impact. If we could figure out how to bring that to life through an international standard in the next 19 minutes, that would be particularly appreciated. Who do we have next? Carsten, could I turn to you now? Any thoughts on that?
Yeah, no, it's a perfect fit. My name is Karsten from the Green and Sustainable Finance Cluster Germany, say convening bigger financial institutions in the German marketplace. And it's a public-private initiative, basically initiated by the state of Hesse 5-6 years ago. My points are really relating to your points, in particular when it comes to the tension between the regulator and a standard setter like ISO or like the German outlet of standard setting, whatever you want to call it. See, for instance, when it comes to impact, and then we quickly talk about the SFDR, and it's currently under review. And maybe one can come up to the idea that the SFDR is replacing a standard setter, is maybe the standard itself. But we would say the private sector, being the standard setter, would be the better place to do so in conjunction with the supervisor to get a good outcome for, in particular, retail clients, so that they have clarity what is actually green or maybe not green, not so green. So that's one. And second point, very briefly, when we talk about those standards, they should encompass the entire capital market products. So there's no exceptions anymore. So there's a level playing field so that everyone or every product needs to fall under that standard setting. That's from my side.
Brilliant, thank you. Holger, can I bring you in on this point as well? Give us an industry perspective. How do we know that the green folks are having impact?
Yeah, thank you for having me. So I'm representing the people you're talking about all the time. BDI, Federation of German Industries, and other job is Industrial Affairs Committee Chairman for Business Europe. So these are the guys who have to put the feet on the ground in the end, have to do the things, and therefore I think it's very important to hear this voice. I've heard a lot now, but in general I think we support the integration of sustainability criteria into financing decisions, sustainable finance. Standards, of course, we know can be a big help. They can create a common understanding and set certain boundaries. They are stabilizing markets. It's very important for industry companies as well. But of course, we see that trying to turn an economy green via the financial system, of course, can create challenges for industrial companies. And of course, if standards are created in a way which is not fully thought through, it really can inflict a lot of burdens and complicate things on the ground, where colors are sometimes not very clear. Things are a bit gray at times, a bit brown, a bit green, a bit whatever. And I think that's very important to know, that you really take into account what these companies are really thinking and what they need. We believe that these standards, whoever sets them, should respect the principles of proportionality, practicability, and clarity. It should be focused, and it should be focused on the necessary items. Because it has been mentioned before, I mean, this is not the only set of rules companies these days doing business are coping with. So we've seen hundreds of regulations from a national perspective, from a European perspective, and especially if you talk to medium and smaller sized companies, this is in the end the owner who has to do this job, or he is hiring consultants and whatever. So I think this has to be thought through very well. A second thing is we really need level playing fields. Level playing fields are at the core, and somebody mentioned those few and very disparate carbon systems and all those tries to prevent carbon leakage. I think it's very important that we have an international alignment for companies, so they do not have to follow 3, 4, 5 standards at the same time. And I think all of the standards need a high degree of interoperability. I would say one more thing. I mean, listen to the companies, because what we are asking, or what you are and everybody's asking from these companies, is to unleash an absolute maximum of innovation, of operation, of productivity, and of course of investment. So we have to do all of this. So we in BDI, we did a study on what it takes to get to the German 2030 targets, about 860 billion, which have to be invested by somebody. And of course, this is what is unifying us all. But so my asking would be to be very, very careful that we do not create more regulation than we create innovation and productivity. Thank you.
Thank you. We've got 5 to 10 minutes left. People are starting to catch my eye and ask to come in, and I'm conscious that people haven't spoken yet. There's a question here, please.
Well, a brief comment. Sean Kidney, CEO of Climate Bonds Initiative. We're kind of the guys that came up with taxonomy in 2012 and convinced the Chinese government, and then when I was a member of H-League, convinced the European Commission to do it. I want to say this is tough, because what we have failed to do in the standards industry has to properly channel the science and what's got to be done. And this is why it's tough for German industry, because we have failed to define what it is we've got to do adequately in the past. The EU taxonomy is an attempt to create a shopping list which will be commensurate with the challenge we face. It's not perfect, but it's halfway there. And mining is coming into it, a big one, comment earlier. We have to radically change our economy in the next few years because we have failed to act over the last 30 years. And we have to address our resilience questions. We're heading into a world of extreme volatility. It started already. That's going to mean obviously the physical, but it's going to be the social and economic implications. There are standards implications everywhere, from the steel that's used in railways that buckles in the heat now in some countries, to the social standards about what we need to do to make change, to capital standards. What is an appropriate level of financial, or the type of financial investments made? What should JP Morgan be doing instead of buggerizing investing in oil and gas? Well, we can't change that because we've got to transition those oil and gas. I accept that. But nevertheless, our level of ambition in JP Morgan's understanding of what the transition should be has not been adequate to the transition. You see a lot of controversy, this particular copper band, that question. The work we've been doing in Europe has been absolutely about trying to channel what is consistent with our tough, challenging, difficult, nearly impossible 2030 goals, let alone 2050 goals. So I just want to say this is hard. The standards industry has failed to address these things in the past successfully. It is now time to come together and work globally on things like interoperability, understanding that we have to channel the science in a way we haven't in the past. We're doing our things. We have a certification scheme. We're developing taxonomies. By the way, 50 countries now have taxonomy projects underway, largely modelled in the European Commission, representing some 65% of global GDP. So this is happening. It's now a matter of how to make it easier to use, not to argue whether it's a good idea, and the policy that goes with it. Because we all know labelling isn't the thing, it's the implementation of standards that counts. And that comes down to procurement guidelines for governments. And it does come down to things like how governments can engineer demand for low carbon concrete and low carbon steel that will allow German industry to prosper in this change without finding it difficult. There's a policy agenda that's important. We can't separate that from the standards. But I want to say, it is tough. It is quite tough because of the challenge we face. But at least the EU taxonomy and the other taxonomy work is going in the right direction. And now I'm going to say, let's help the European Commission and the 49 other taxonomies around the world to become easier to use without sacrificing ambition. That is something the standard industry has some experience in and can really make a difference to.
Great, thank you, Sean. I'm conscious there's a couple of people who haven't spoken yet. Marco, do you want to go next?
Yes, thank you very much. Is that okay? Okay. Marco Wilkens, University of Augsburg, and I represent the Center for Climate Resilience, what we have at the University of Augsburg, and the research platform on sustainable finance. So I would like to come back to the impact issue, what you raised, because I think we really need a call for impact. That is, we might call it. Because that is what we are concentrating on, and that is, I think, we are here for, to generate an impact. And we're talking about sustainable finance. So why do we do sustainable finance? Maybe also to quantify the risk for the company or the risk for the stock or whatever, but also, and that is the inside-out perspective just mentioned, we also want to think about how sustainable finance itself, so for example, the investment fund itself, the sustainable investment fund, can generate an impact. And this is something which is, from my point of view, not at the topic of many regulations. Maybe not yet, because it's very difficult, I would agree, but we have to do the second step. The first step is, of course, to think about what company to invest in is green or brown. That is very important to help people, for example, to do portfolio allocation. The portfolio allocation itself can have an impact, a small impact, I think, but the main impact, from my point of view, can be drawn from engagement activities. So and here something, what I would suggest is very, very promising for standardization. So there are so many portfolio managers thinking about doing engagement, and all of them have to do the same job. And that costs a lot of money, that's inefficient. And here I think we need some standardization, which can't be offered by the EU, for example, because that's a different story. The EU can distinguish, using the taxonomy, for example, companies into brown and green, and that's done very, very good from my point of view. Not brown or green, but the companies online or or transforming or not. So therefore, I would call for thinking about a standard helping people who like to engage, specifically smaller portfolio managers. The large one can go to PRI, for example, and you help them, you're quite good. But the small portfolio manager funds and so on could really need some help. And that makes the whole game or the whole engagement process much more efficient. 2 points to mention. The first is this, I think, really has to focus on impact again. So there are so many possible aims one can follow during this engagement processes. But impact, I think, should be in the center of it. And the second is keep it as short as possible, because otherwise it gets too expensive. That's the next problem. Thank you very much.
Great, thank you. Last but not least, Amir, you've waited very patiently to speak. Do you want to say a few words on the part of Carbon Disclosure Project, particularly with this impact measurements piece in mind?
It'll be very few words because of my voice. I apologize. I'll come out as an idiot in the conversation because we are the only organization, I know PRI collects data as well, but that generally serves as a platform for data, so our perspective is slightly different. CDP tends, Emil Sokolovsky, Global Director of Climate, CDP. CDP, at the heart of our work, is all of this harmonization in order to be put very, very crassly, to be able to provide the data that lies at the basis of everything that alignment is to be used for financial incentivization, the theory that everyone knows. A while ago, I tried to incentivize my team on work, because you do and you should, and I made a mistake, and I used a word that shouldn't be used when you're trying to incentivize anyone, but I'm going to use it again, I'm going to use it here. Sorry, and I'm going to use it here, it's not going to make it much louder. Which is semiotics. CDP does, and I think what you mean by standardization is define the content of words. If you're putting pieces of legislation next to each other and you're talking about alignment, there are two things that happen. The standardization, which is standardization when I say 1 ton of CO2 equivalent, no matter in what rule, anywhere, that means the same. And there's ambition. How many tons we need to reduce and so on. I'm vastly oversimplifying. Data tends to be able to do that without a standard. Standards are brilliant because they give you something to do litigation around other than fraud. But they aren't the be-all and end-all. The standardization and the way in which the data is presented will then bring them into one place. The principle, and I think I'm addressing what many people here have said, that CDP tries to work with, is, and I think this is the point that definitely industry was going for, single right, many use. Submit one report and have it used by every jurisdiction, as extensive as that is. That is very kind. It's been happening to me in every meeting, and I'm touched by humanity in this INCOP. It's not beer, which I'm disappointed in humanity in this COP. And also, I've been offered drugs at this COP, so it's amazing. The point of single right, many use is standards have to be different. 50 taxonomies have to be different. A taxonomy, to be effective, needs to be local. But there are going to be underlying principles. It's identifying not what the principles are of the taxonomies, but identifying what the principles are in knowing that you have transparently and credibly tried to interact with them, if that is the correct word. Last, because you kept me last, so last, and I promise that then I'll let you go. There's a false dichotomy that a lot of us are discussing. It's the dichotomy of the difference between flexibility and credibility. Standards need to be flexible, and suddenly now there are camps. If it's flexible, it's not credible, carbon credits. If it's very, very credible, it's not flexible, therefore nobody can use it. And that comes from thinking of the world in a linear way of from a voluntary to an obligatory to a mainstreamed. Obligatory mandated rules and regulations are a hammer. They're incredibly effective, but they take a very long time to change. Voluntary standards are always going to be needed in order to provide a level of flexibility that lives alongside credibility. And that would leave room to innovate while also being, I would argue, strict enough to actually have an impact. Final point, I'm worried about trying to define impact. I truly am. Because our attempt should be that there is someone somewhere that defines impact in a singular way, but you can't expect companies and financial institutions to do that. They have to report on what they actually do, and we will define what the impact is of the thing that they do. So just that proviso. I'll shut up now, and thank you very much. And thank you again for the water.
Thank you very much, Amir, and I like that idea of the need for flexibility via voluntary standards alongside the credibility of those developed by the official sector. That's everything we have time for in this round table, I'm afraid. Thank you all very much for your contributions. Apologies to those who we didn't get to, either because you weren't on the you weren't on my list or we ran out of time. Can I turn now to Christoph Winterhuller from the German Standards Federation, DIN, who's got the inevitable task of summing up everything we've just heard in the last 90 minutes.
If you have another 60 minutes, I can sum it up, because I took a hell of a lot of notes, but instead of summing up all the details that you've already been saying, is kind of what is the essence, what I heard. And I have to tell you a story. Last year was my first COP. Everybody talked about standardization, and every discussion I attended, they approached it from a different angle. They actually talked about a different thing. One talked about regulation, one talked about deep technical standards, the other talked about kind of vague, common kind of ideas, common processes. But everybody used the term standards, but nobody actually talked about the same thing. This year, we are sitting together and actually agreeing on that we need to harmonize standards, we need to have a common terminology, and we need to bring the two worlds together. What was a little bit scary today is that I would say 95% talk about how can we change behavior, how can we measure impact, and there was one poor person who had to represent the real industry that actually need to change things. And that's what it's so important that we use a mechanism like international standardization, where companies are used to participate, are used to be one of the most active stakeholders in the room, actually having a say what is realistic, what is practical, what is usable, in order to understand the expectation of the financial markets, the expectation of the investors, but then balance it out with what is practically doable. And I think that's the bridge of the two worlds that we're trying to achieve now by signing agreements on the highest level with IFRS, looking at the cooperation with IFRAC to bring, let's say, the financial reporting standards together with the real standards, how to measure quality, how to measure, let's say, the technical details that industry needs to implement. That's not going to be easy, but I understand there's a lot of willingness, that there's no competition. It's two approaches, going top down, really looking at impact and what makes a difference, versus how does the industry function today? And what can we change? Maybe little changes on the rules that are used in a production facility that will actually trigger a lot of change, that will make a difference, that will actually produce the impact that we need. And of course, embrace innovation rather than having too many kind of rules described, and then all the investment is going towards reporting and not towards innovation. And that needs to be balanced. And that's why we need the practical people sitting around the table. And ISO, I would even call ISO not the standardization organization. ISO is a process that brings all stakeholders around one table. And this is actually what we need. It's first international, and then it's bringing different sectors, different perspectives around the same table, like we do today. There's a little table, but a lot of round. And I think that's what we need. We need to send the people together. We need to rethink our processes to basically embrace perspectives of the financial markets that are not present in a lot of technical committees. But I think it would really help to understand what the real world is capable of doing, what the financial markets need, that we can really use the momentum. And that is the positive thing. When everybody talks about standardization, a lot of organizations and initiatives are popping up. That creates momentum. And you said it. I mean, it's a tremendous momentum that we have achieved. Now we have a mandate at IFRS with ISSB to harmonize the things from the financial markets. If we're now using the same momentum, not going into details, that will in the end overload especially small companies. Bring them on board now. Try to make a bridge. Use existing standards. Try to understand what is already there in terms of management system standards that can be utilized, and change them, modify them, bring in the little details that will actually enable us to measure impact. And that's what I heard today, and I can only encourage us that this is kind of a starting point, that we keep up the dialogue. I think there's food up there, so we can continue the discussion, but most importantly, spread the news. That, I mean, there is corporations being signed, there's a willingness within the International Standardization Organization to open up their technical committees, to involve kind of new experts, new perspectives, and make sure we are really bringing the right people together that make this happen in a practical level. Thank you very much.
Thanks ever so much, Christoph. Quite the call to arms. Thank you all for making the time to come. Please stick around. We have some tea, coffee, cake to enjoy. And yeah, enormous thanks. That was enormously productive and successful. Thank you.